Hello, 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 everyone. Good morning. Happy non-farm payroll Friday. How is everyone doing? Hoping Bob can jump on real quick and help us make sense of the supposedly stellar unemployment figures. So, let's see who's here. Good afternoon, Charles. Good morning. Good morning, Patrick. Because it would be more rate hikes and no pause yet. Good morning, Dave. Good morning, John. Man, that number explains why initial joblessness was declining while continuing was rising. Good evening, Star, everyone. Referring to the candlestick pattern, I think you're talking. Insane data. Yeah, I want Bob's take. I mean, this is the biggest annual seasonal adjustment of the year, so we're gonna have to see that. Where else do we sit? Good morning, Donald. Good morning, Waka. Good morning, Christo. Let's see. I gotta get caught up. Good morning, Options 22. Good morning, APs World. Get them a job. Pavneet. See, there is growth somewhere. Let's buy. Well, again, is good bad? Is bad good? Is this number even believable? So we shall see. If you were living in a cave this morning, on a headline figure, unemployment coming in at 3.4, down from 3.5. This is as lowest since 1969. On-farm payroll expected around 185 to 190. Actual is 517K. Participation rate ticking up from forecast. Average hourly earnings coming either consensus or forecast coming in either in line or slightly better. Earnings month over month coming in line. And then you get all the subset. Now remember, still we got S&P, the services and composite PMI 15 minutes after the open, and the ISM numbers. Bob expecting them to jump back up, and the consensus is expecting them to jump over 50. So let's see here. Let me just bring on the Bob. Hold on. By the way, just for people's information, the gamma flip is about 41.39 this morning, trading 41.37, so we're right at neutral gamma. If there is selling pressure, it accelerates into negative gamma, and any rallies go into positive gamma, so do keep that in mind. And in terms of earnings, it was all just small stuff, unless you're holding one of those stocks this morning. More importantly, let's get Bob's take on non-farm payrolls, seasonal adjustments, and what's going on. Is this good? Is this bad because of seasonal report? Just clarify it for us, Bob.
Well, seasonal adjustments, I don't know, because the seasonal adjustments haven't changed. So they'd be seasonal every time. Either way, this is a shockingly good number. Not lost is, excuse me, last month was revised up to 260,000. I mean, it was 223. And now it's revised to 260, and then we get the 517 today. And it's not even that. Wages were up again. Now, people are making a big deal on financial news that wages fell a tenth, but they fell a tenth from a revised higher number. So last month it was revised higher by a tenth to 0.4. And then this one comes in at 0.3. This is, of course, the average hourly earnings month over month. And people are making a big deal that average hourly earnings is actually going in the right direction. Well, not when you revise last month up, it's not. Because who's to say that this month isn't going to be revised up? I suspect this number will get revised down, but I don't think it's going to get revised down to 80. I told you guys I thought that the number was probably going to come in a little strong. Not like this. If anybody if anybody says to me, Bob, good call on saying a strong number, no, not a good call. Absolutely wrong. No clue it would be this strong. Participation rate was up. Average hourly earnings year over year, higher than expected. Unemployment rate falling. This manufacturing payroll is up 19,000 in January. I mean, granted, this is the this is the January figures. In January, Construction jobs up 19,000. This reminds me of how we were all questioning the decline, or rather the lack of addition of jobs in retail in December. So it's strange, this number. Mike, did we see a lot of selling of S&Ps before it came out?
We
I looked
saw it was hitting the bid pretty hard.
before it came out, right?
No, well, just I mean, slight little, a little starting with a downturn, a little before it came out, then accelerating once the number hit.
Look, if this is, I don't mean to say this because I'm a very big proponent of like, look, the data is the data. If you believe it's being manipulated, then it's always being manipulated. So it's the data we use. You can't say it's manipulated only when it goes in your favor. So I'm not a proponent of talking about data manipulation. Average hourly earnings revised to 4.9% this month, the year over year. And then they're like, well, it's 4.4, so it's lower than last month. It was 4.5. It was revised up to 4.9. I mean, these are big, big numbers. And the takeaway from this, for me, is Jerome Powell looks like an absolute fool if these numbers remain anywhere near where they're at after revisions. He looks like an absolute fool. And you better watch for Fed speakers to pivot back to hawkish. So that's in the case if anybody, I mean, look, the base case would be these are really good numbers if inflation is really going down. There, in my mind, is zero chance that goods inflation stays depressed if these numbers are real. Zero chance. Sterling was talking yesterday, and for those of you that don't know, Sterling has a very intimate knowledge of the car business. Okay. And he was talking about the car demand and the lack of supply. There is zero chance inflation stays tame if these numbers are real. And again, I'm going to go with they're real. So that's my take on it. Zero chance. When you look at yields, let me look at yields a few minutes ago. I just set them. Yields have not erased the entire decline, but the 10-year is up 10 basis points. The day of the Powell testimony, they were down 13. So they've almost recovered. Wait a minute. I'm just looking at it now.
They've recovered everything from Powell.
Yeah, they basically were up 16 basis points. And if you add today to where it was pre-meeting, they've recovered 20. So they've almost recovered all of it. They haven't quite recovered all of it. We closed at 352 on the 10-year note. Let's just look at the end of the month. On the 31st, we're at 352. Today, we're at 349 so far. So we're back to where we were, where I did not look at the CME Fed Watch tool before this number. I wish I would have, but I'll go off of what we talked about yesterday in the live stream.
I did look at it. Well, if you want to know what's going on, we're still pretty. For March, it rose a bit, but it was already high, and now it's up to 94.5. And May was a pretty decent shift. May's now almost 50%, 50-50 with another 25 basis points. And before it was yesterday afternoon, it was fully priced. It was not fully priced in, but it was that they were going to pause in May. And now the extra 25 basis points is really ticking up.
Do they still have the rate cut in October? Do they still have that price in?
It was they have, well, it depends because it's back to if they hike in May, then there'd be a cut in November. If they don't hike in May, it's flat in November.
Okay.
So it all depends on that May hike. And December is now, December is still a cut. No matter, it's either one or two cuts in December.
Yeah. Charles made a comment about housing. So housing prices, Charles, in Florida, the area have dropped, but you're right. I just talked to a friend of mine whose flood insurance went up by $661, which is about a 90% increase. So you're right. Housing insurance is a part of the factor of falling home prices, because there's a lot of homes. For example, I mentioned to you guys that I know somebody who picked up a deal on a house that was defaulted on because of higher rates. This particular person who I was helping look for a house would not even look at houses that demanded flood insurance. So yes, you're correct on that. So anyway, that's my take on it. If anybody's got any questions, otherwise, Mike, I'll let you continue doing what you were doing.
I didn't see anything. So, well, thank you for helping us make some head thing of that. So we're still expecting the ISM numbers to come out, I guess, back in expansion in
Yeah, I think
45
slightly.
minutes.
I still think they're going to miss a little bit on the expectation, but this number's an outlier. There's no doubt about it. There's no doubt in my mind this number's an outlier. Doesn't mean that the economy's not strengthening, but the other data isn't showing it strengthening like this data.
Sterling had a question. Bob, assuming these employment numbers are close to being correct, what impact does this have on productivity given the Q4 GDP?
Well, that's the interesting part, Sterling. You want to watch productivity now, because if you're just hiring part-time workers and unproductive workers, that's a horrible set of data. And now you look at it from the perspective of Amazon raising the entry level. So let's assume that they're raising their entry level from $14 an hour to $17 an hour, but those people are not doing any more work. Productivity drops and GDP does not grow. You can't have an economy grow with shrinking productivity, because that means that the total number of goods made is minus the cost of those goods. And the cost of those goods is going up without more goods being made. Bad for GDP. Moses.
Yeah, that's all of them. There must be a dog outside because they're all going nuts. All right. With that, but thanks for popping on, Bob. We will see you again next week.
Have a good weekend. See you.
Thanks. Bye. All right. All right, everyone. So a couple of things I did not go over this morning. Did I go over it or not? But we have fear and greed, by the way. Fear and greed, this one in extreme greed, which when you get up in here, this area, it is primed for a reversal, as I talked about yesterday. These are notoriously hard to trade because sometimes you get this rounding top instead of a V-shaped top, so we can get secondary reactions, are the ones I'm focused on. After a horrible Amazon, Google, and Apple, going to be interesting to see if there's buyers step in on the open. Energy also firming up a bit. And the bigger story today from my aspect, I'm just going to peek in it real quick, is the dollar index. This is a pretty substantial reversal. So I'm going to see if we get the close above the rotation zone and maybe above 102.30, because that solidifies that this is, even with a pullback, probably at least a short to maybe even medium-term bottom in the dollar index. S&P, key areas I'm watching, we're back to yesterday's lows, which is key from a pivoting around perspective. You have this really ugly little head and shoulders. More so, I'm just interested in, there's some clear path moves you see here from Wednesday from JPOW. So really based off of this, if we continue to break down, I'm watching for a return to 4,100. Can't get into anything really minor, any bounce here. It would just be back to about 41.57. And can't get interested until we get above 41.70, really on the long side, unless we get a substantial intraday bottoming pattern. You can see here also, you pay attention as we go down, just because of algos, about 41.25 area, and intermediate because it's the bottom of the rotation zone. So that's my upside and downside. I mean, if something strange happens, you had a major intraday reversal, not expecting it, but I'd then be using the retracement harmonics once we put in the low, and then I'd target yesterday's high about 4,200, and the key level above there is 42.24. The NASDAQ, You also have the very ugly head and shoulders. The key thing is if it breaks down about 12,500, below 12,500, we got 12,275 is the key area with the clear path. And in front of that, you have about 12,435 as a potential rotation support point. Right off the open, I'll be focusing on about 12,500. So on any rally, not interested unless it starts getting above about 12,735. The Dow, as I've talked about before, the Dow is dead right now. Besides, it's not even worth short-term scalping for me, so I'm just ignoring it. By the way, still an inside bar with NASDAQ, and do not ignore yesterday's lows if you're looking for, which is 12,501.75. I mentioned 12.5. Russell, again, still holding up, even just back to 87.5, though yesterday's low is a long way off. So I'll start getting more interested if the Russell to the long side gets above 2005 for the final just takeout of the cup and handle targets, 2021 roughly. But major support would be yesterday's low and then 1950 if the pullback continues. You can see here, if it keeps dropping below this intraday support level right now that's trying to form, you only have a little clear path move down to about 1972. Spiders, we have the gap fill potential to 410.80. We're trading 411.16, so any rollover on 410.80 would be key. And then below that, below 410.80, and that's pretty key because you also have the rising 4-hour rotation zone. You have some support about 408.75 to 409, and then not much back down to 406. To the upside, and yes, did this qualify? I got to check that. I did not check that before. I was too busy. No, it did not. So that is not a double top that would be triggered this morning. But on any rally, your resistance is about 413 to 413.25 and then about 414.75. The Qs. The Qs. 305 pre-market. I will use this 302.20 area just from a prior harmonic, and then I will be using 392 for the gap fill. Major support not down to 297. On a move back up, I will be watching for yesterday's low, 306.73. To the opening price of 307.57 would be major resistance. You got 307.53, a prior harmonic in there. That's why I've not updated those. So those are all the levels I'm looking at there. The DAX, little pullback, but the key pullback area is this breakout and the rising rotation zone that's coming in about 12,250 to 12,300. Nothing else to do yet there. The notes. Now we're getting interesting again because now this is against the 200. You see here, poke through it, close below, poke through it, close below. Non-farm payrolls coming out pretty decent reversal, but if we close below 114.05 and a half, we have the double top pattern. 103.08 and a half, 112.25 and a half, 112.11. Takes us back to this low support area from the end of December and mid-November. So that's what I'm watching in the notes. Again, we already touched on the dollar index. Going to be watching where that falls. Also, if we do get a pullback on this, it would be a sloppy potential head and shoulders, and not necessarily today, but next week. VIX, even with this, there's not much fear, just a slight little up move, and there's no major pattern in here. So I'll just be watching roughly about 1925. Crude, seeing if we're going to put in this bottom pattern. Remember, it's an aggressive % B buy above yesterday's high, but it needs a follow-through close. Still holding the trend line. The key area on a closing basis, though, is still 74.36. A close below that, if this rolls over and falls out of bed, would invalidate the triggered double bottom pattern. It would be over. Gold taking in the shorts, finally getting that pullback, breaking down below a trailing level for me, 1922. So I'm starting to watch for the continuing pullback, and then we'll see if there's a bottoming pattern. You had the little break above with silver yesterday, the close back in. So this on the shorter term is what we watch for with a shake and bake kind of thing. With the little poke above there to close back down. We didn't cover that yesterday, but with all the earnings going on. But the rejection on the other side, so I'm just going to be patient and watch for the pullback also in silver. Copper holding up the best, but nothing going on there yet. The Japanese 10-year back at 50 to close out the week. So going to be watching now. Again, we got the reversal here. I am stepping aside from the yen for the time being, watching for a bigger rally pattern, and then somewhere potentially back into the weekly rotation zone before really looking for a short setup again. Euro reversing down with the dollar strength, but still not below the rotation zone, so I'm going to be watching the daily rotation zone. And again, this could be setting up for a sloppy head and shoulders on any rally next week. The pound, we still have the major topping pattern, but it's still a ways away, but we're back below the 50. I will be watching for a return back to the 200 area, about 119.70. Bitcoin also with the NASDAQ pullback, pulling back, but still, unless it gets below about 22.6, I don't substantially get back into pullback mode yet. Tesla, just a slight gap down on, if you get buying coming in, it would be for the gap fill to 188.27. Again, there's no major topping pattern. The support is from the gap fill is at 181.41 and then about 178.50. On a bigger pullback, since we don't have a significant topping pattern yet, the next target would be 169.32, and it would have to be traded with intraday momentum from my perspective. All right. Amazon trading, or roughly the close from before yesterday was 105. What was it, 105.15, trading 105 right now, and against this major support level, and with the rising rotation zone. If it dips down, about 102 is the next level of support, and then major support coming in at 99 to 100. What has to tip it back to until, and you have that 50% harmonic coming in at 97.72. So I will be paying close attention to this rotation zone. We'll just have to see if it gets bid based off the open. If anything gets bid up by the people who are trying to do the gap fills. But do your gap harmonics, and if it does get bid up, do not. Your likelihood of a full gap fill is slim today, so I would focus on your close and yesterday's open. If you're trying to play this to the long side on any rally, the low is 108.88 and the close and the open is 110.25 would be targets besides using gap harmonics to the upside. Let me just peek at a couple of these other ones. Google, key support after triggering the double. The key support is about 102.25. It's opening just above there, and then it would be the gap fill back to 143 with the rising rotation zone. On any move back up, I wouldn't even go yet to the lows. I'd be looking at about 104.50 to about 104.85 as a first target area for a partial gap fill. Then I'd use the lows 105.61. Apple 148.39, 146 is key support. 146 to 145 is key support area. On any rally, it would be to about 140. It's still one. It's not even reversing yesterday's lows yet. Yesterday's lows were 148.17. Well, I guess we're slightly below that, 148.04. So on any rally, I'd be using the open 148.90 to roughly about 150. If it gets above 150, then it'd be the gap fill, but I'm really going to be watching to see how that closes in relation to the 200. All right, we got the open. Let's peek in at the open. Then I got to run. Sorry, I did not get to all the comments. S&P. So just trying to see where the goods. There's a lot of little resistance areas over here, but your major one is about still 41.56. Let's check in at the tick. The tick pretty negative. A lot of selling on that open. So I will be watching for a shift first above about minus 600 to minus 400. And then if we get in anything bullish, it has to get back above zero and start making that shift to higher. But let's just see how the market holds up. So right now we're getting a little snapback in the S&P and basing so far in the NASDAQ. Do pay attention if we get something to the upside. You do have the clear path. This is an advanced clear path move. So, and I'm saying especially after 9, if anything gets a rally on more substantial, you have an advanced clear path move both in the NASDAQ and in the S&P, although it's very, very sloppy. So you got to target this breakdown zones. With that, I will jump. I will see everybody for a quick recap after the close. Have a great trading day. We'll have to do that after the I already did gold. And we'll have to do anything else after the close today. Bye for now.